Hi, I'm Sam Meredith. Portugal marks a year since they completed their bailout programme, so we're discussing the country's economy by talking with economist from Oxford Economics, Ricardo Amaro. Portugal's government and its creditors both say that the restructuring programme is working, pointing to the country managing to emerge from 3 consecutive years of recession. But growth projections long term and its unemployment rate are still a concern. How do you assess the country's economic health?
Indeed, I see that the situation is now gradually improving. During the economic adjustment program, the economy contracted 8%, but from last year it has been growing at positive rates. We expect GDP to grow 1.7% this year and then 1.4% in 2016, and we also expect this growth to be broad-based. So we see both private consumption and private investment contributing positive, but also net exports to have a positive impact. And we also point that inflation is now gradually improving. So the country managed to get out of the deflation recorded last year, and unemployment is also now at 13%, which is still high, but 4 percentage points lower than the 17% peak. So we see the economy improving in the short term, but as you mentioned, the long-term prospects are a bit problematic. For us, the main issue is that the unemployment recovery has been slow-paced, so we think that this will constrain consumption spending in the future. So we agree that the long-term prospects are a bit shady in some sense.
With Greece's struggles ongoing, Germany's finance minister, Wolfgang Schäuble, cited Portugal as the perfect example of how a bailed-out country that listens to its creditors can turn things around. Despite this, though, after Greece, are Portugal still the weakest link in the Eurozone?
I think that the domestic debt of Portugal is still problematic, and in particular, the general government debt to GDP is now at 130%, 40 percentage points higher than in the beginning of the crisis, and this exposes the country to the financial markets. And I think although the government had a strategy of based on the leveraging of the economy, I think this hasn't been solved during the country's economic adjustment program. But it's also important to note that Portugal's position now is much more positive than in 2010. In at least in some key factors. So the country managed to solve its public deficit program, or at least is on the path to solving it. For example, now it's recording a primary budget surplus. Its current account is also in surplus for the second consecutive year. So of course this reduces the financing needs of Portugal. It seems that Portugal is now in a position that it could resist until for example, the end of the year without market access, if market access was lost. So I think this cash buffer is quite important and creates stability. So I think I agree that. So to conclude, I agree that the country still presents some undesirable issues of being the debt level. The debt level is the most important one. But then I also point these more positive factors in comparison to 2010.
Lastly for today, which indicators should we be looking out for that are likely to have a significant impact on Portugal in the short term?
I think there are 2 main indicators. Of course, the Portuguese government bond yields, and then I think for Portugal it will be very important to look at the business and confidence levels of the Eurozone. For the moment, both are still at reasonable levels and more or less stable, but one can easily picture a scenario in which the inability to reach an agreement in Greece leads to a dramatic drop of confidence levels in the overall eurozone, and that of course would translate into higher bond yields for Portugal. And although I'm confident that this cash buffer that I mentioned before would protect the country in some way, a period of high bond yields would still translate to a negative economic performance due to increase of interest rates charged in the private sector, also a decrease in consumption and investment due to lower confidence. So I think these would be the indicators to look at, and it would be important to keep a close eye, because in these things, this situation, when it changes quickly and sometimes quite dramatically.
Thank you, Ricardo. Be sure to check back with Djugoscopi for more updates throughout the week. Goodbye for now.